take, let me just quickly welcome in our guest. Samir Arora is now joining in, founder and fund manager at Helios Capital. Samir, good afternoon. Great to have you with us here. Thank you very much. This was worse than what anyone thought. Although at the margin here, the narrative became that, well, others are taking a hit larger than us. So for some sectors like textiles, etc., it may not be that bad. Positive, I don't know, but maybe lesser hit in that sense. What is your own perspective, Samir, on the overall situation?
Textiles, it is not. Yeah. The first thing in a big picture sense, although, in our long only fund, we are fully invested and all that. But I would think this behavior of the market is a bit suspicious and not to be trusted because, Indian market has made this simple thumb rule, not that they will analyze a stock, but whether that day there is net selling or not by FIIs. I think beyond a point, just because if today they have not come in or there's a slight match or mismatch of these two, then the market is up. But it just looks a bit too much because my general thumb rule is that you can't suddenly negatively surprise either in a company results or in macro events. And within 10 minutes, say it is discounted because now it is known and it is bad, but it is the worst that we can be. These things take time in real world. And to just discount everything in 30 seconds is a bit much. Although big picture, we are very happy that our long short and both these funds are sort of playing a bullish stance. But this still looks a bit much.
You mean the resilience? It looks a bit much.
Yeah.
Tariffs also look
too strong. It's a bit too strong. You suddenly can't go from an expected 10% type tariff to 26% type tariff and say it doesn't matter. I think it can be handled. But the market is assuming everything. For example, I saw on your channel and others that India is about to do an FTA with US and it will be done by year end. Year end is 9 months away. So for these 9 months, these tariffs will remain, right? You can't say that, okay, because we'll be negotiating something today, only give us our waivers or, give us a lower rate. Also, I think these second round effects and third round effects, first of all, we have not seen European response, Chinese response. Tonight should be Canadian response. And then US, that is Trump and Scott Bessent have already said that please don't try and do reciprocal tariffs on my reciprocal tariffs because that might aggravate the situation. I think we can wait 2-3 days and see how this whole thing goes to second and third round.
There was Neelkant Mishra who was with us in the morning, and he was saying that the way this impacts economy-wise India is not that much, but the impact will come from higher equity risk premium. And he was generally broadly saying that this is it's going to linger. It's not done, and I think that is your view as well. But broadly, beyond that, what is your view? How does this seep in? How will it show up? Yeah.
From an economy point of view, it's not a big deal because we don't have big scale of imports and exports. So this thing is that we need to import additional $30 billion. How? If we assume that formula is what it is, India is exporting some 90 billion, importing 40 billion. So the trade deficit is 50 with US, divide that by 90, that is broadly this number. So to bring that 50 billion down, you have to bring it down to 20% type number because then you get 50% discount and your tariff is 10%. And there's no need to go below that because that is the minimum tariff, which I guess will continue for 4 years for sure. So we have to reduce deficit or import more $30 billion. And it's not a waste of $30 billion. You're not saying, extra thing we have to do. You have to substitute something here, something there, maybe 10 billion of oil, 5 billion of cars, and the rest 15 billion the government can figure out. But these are too easy to do things that can be done. But basically, you need to somehow show a path, or I don't know whether they want to see actual numbers or just a path to see this going down to, 20-odd% deficit as they have defined it.
Samir, hi. Afternoon. Reema here. What does an emerging market investor do? Now, he's grappling with 34% on China, 36%, Vietnam is 46%. What is the call foreign investors are taking now when it comes to investing?
I think 5-10 days, somebody should wait. I also don't believe that Vietnam will remain at 46% simply because they have already officially announced, not proposal, they have officially announced that their tariff for US goods is going to be 0. They've already put it out there. It's just that because the current numbers are such, Vietnam does not have the ability to import much from the US, but they can easily say that you please send us whatever our guys can buy, just that they can't buy. But the tariff is zero. Then what do you do? I think they will go to 10% by 9th April is what I think. So please don't, because you see, they have already said means, I don't know whether legally what is the word, but it's public and known that they have made it zero, just like Israel has made it zero. So these other countries can go all the way. It doesn't matter to them. There is not much you can, they can import anyway. So that's not their fault. So Vietnam will be out. China, my thinking is that China is not going to accept so easily. So what if they say that for things that US needs, let's say bulk drugs, we put an export tax. They can do any of these things, because if you put tariffs, so what I'm saying is every investor, including me, who is actually fully invested more or less, 4 or 5 days, let's see at least for 30 seconds.
Yeah.
You're not going to miss a big rally. That's all I can say.
Absolutely, Samir, take that point, and this is what we've been discussing since morning, right? That it's not just about that tariff number that you can match. Vietnam will cut, India can cut, all countries can cut. If it's about trade deficits, which the US is running, then it's a much bigger issue.
No, I think India and all can't easily cut to zero, no, because there are so many, because it's a bigger country, so it's not as small. But for Vietnam or something, what can we do now? And that I think those can be accept.
No,
otherwise, the same things will come from China plus Vietnam. They might as well promote Vietnam at the expense of China.
Absolutely. The reason why the US is running such large trade deficits is that it's more cost effective to produce those products in a Vietnam or in a China or in a India. So that's a much larger issue that we'll wrap our heads around. Anyway, now coming to India, we'll pull up some graphics in a bit. I was looking at a Morgan report, lots of estimates doing the round on what the numeric impact on us is. So most people are saying maybe 30 to 40, 50 basis points shaved off this year's growth. That's direct impact because of our, small exporting segments that we have, electronics, etc. Everyone is more worried about the second and third order impacts. Morgan Stanley, for instance, is saying that it could actually delay the invisible private sector capex cycle even further. Because how do you invest when you don't know where the trade lines are, where is your supply chain, should you look at US as a key market or not? So it pushes back private capex. Yes.
Absolutely correct. And also, as soon as US signals that these things are the max tariffs and now they can be negotiated. Obviously, every company will assume that my government will negotiate downwards, and there will always be a plan that government will have. So the investment into US also will be delayed. Everything will be delayed by 4 or 6 months. And in our case, the other issue is IT, which, by the way, I've been saying for some time now. But IT is, Reema was saying IT is a second order effect or third order effect. Actually, IT's impact will be a fifth order effect. Because if IT is not strong, what does that mean for our consumer and other things? And other things. So what I'm saying is, it is uncertain. India is at a relative advantage. But also, if the US market, for example, let's say does not fall much, because we accept it, obviously US will put more tariffs on sectors now, because they will feel comfortable that the world has accepted it, because they have already said that they want to put sectoral tariffs, which they've done on auto.
Samir, so coming back to my simple short question, because of all the complexities, because of all of these complexities, would it be a little foolhardy to assume that the great Indian bull market had begun again? March, we had a good month, and people wanted to believe the worst is over. Bull market chalu. Would it be wrong to assume that?
No, relatively it is over. Absolute depends on what happens to the world. So my logic is, first of all, next 4 or 5 days, so somebody should just relax and see his conferences and press conferences.
We can't relax, no, Samir. We
have to report morning, evening.
Beyond that, you have to see if the US market goes down in a dignified manner, goes down 8-10%, we can all handle it and we will outperform it, and maybe not be up in that period, but at least it will be dignified and you will get FI flows. But if the US market is down, much more than that, then we cannot say we are isolated. That is what my lesson experience is from 2008. If these other markets go down a lot, then you can't make money, you may lose less, you may do this. Of course, in 2008, even though we had no connection with the US subprime crisis, India was down double of US. So you don't want to be at that stage where you think that US will fall a lot. But
Okay, so 8 to 10%, yeah.
We are outperforming. It's a relative bull run. One day it will become an absolute bull run.
Yeah. I like it in a dignified way. Hindi में तमीज से थोड़ा 8-10% घट जाए.
थोड़ा शराब
से हम थोड़ा इज्जत से गिरेंगे.
Just Samir on just a quick word, right? You invest in other markets, etc. So what is the behavior of the point that Reema said eventually? I mean, does money go back home in a situation like this, which is US, go into the dollar?
I don't think it'll go home. This is a serious change. And, like I sold mostly everything in the Feb month and a little bit in early March. But I have not felt even to buy 1% back in US. Not even 1%. Also, by the way, look at it. If Europe has said it in black and white yesterday in their press release that they will be targeting US services, because they understand that US has services surplus. And so they are saying we will target US services. US services means what? That means you have to target Google and Facebook and all these kind of guys. So this will be messier than normal. And so right now it's too early to buy. Of course, people in US will do some, just like we keep doing in India, a little bit of plus minus. But overall, what I'm saying is it's too early to even celebrate, although relatively today is a great day. And yesterday was a great day. But I'm saying let's not jump in. That's all. There's nothing.
Yeah. As nowadays the youngsters say, everything is about vibe. The vibe today is one of not jubilation or celebration. It is confusion.
Relief.
Actually.
No, somebody you can say it's relief. But I'm saying it looks a bit, fishy if things go completely unexpected and still the market is okay. It should. That's what I think.
Correct. No, absolutely. On pharma, Samir, do you have a view?
See, pharma clearly has relatively benefited and in absolute also benefited. The only thing is that Trump has said that he wants to have 5 sectors in US, which he wants production there, manufacturing there, whatever. So if he has some sectoral tariffs, I don't know. But otherwise, obviously, it's relatively escaped and in absolute also escaped. So that way, it is justified for that to be up today.
But Samir, finally the question is कि करना क्या है? You're saying 3-4 days do 3-4 days. Okay, chalo 3-4 days. You're saying don't do anything. Just watch this, understand it. Beyond that,
so बाद में it depends. As I said, if the US has escaped it, it'll fall for sure. But it doesn't fall apart. Then this emerging market flows will come. Somebody will go and explain that India has outperformed. India is this. We will say we have less intensity of exports and our exports, the total absolute amount that we need to do is $30 billion. And in 5 minutes, you can make this thing that 10 billion you can import oil, 5 billion you let cars come in, which will be about 3% of India's car volume. If you say 5 billion divide by say $25,000-$30,000 per car, so you can import 150,000-160,000 cars. It is just 3% or 4% of India's volume. It doesn't change the world. So you got 15 billion covered. Another 15 you have to find here, there, something, and you can say, hello, my deficit is down. Story over. It's not a big deal if you have to explain it. But if in between they say, but US is down 15%, what is the secondary effect of that? Then it becomes very confusing. Also right now, since IT is doing badly and consumer large companies are doing badly or not doing great, we are left with financials and a little bit of my food delivery type high growth companies and a few here and there. So that universe should expand a little bit. It just needs a little bit of time, I think. Just give some time so that a new story can be firmly in place rather than just saying it didn't fall today, therefore the bottom must have come. That's all.
So while we're making the narrative over the next 3-4 days, Samir, is there a case to sell today and watch the dignified decline from the sidelines?
No, I don't know whether it'll decline, but what I'm saying is we must see not 3-4 days also, it could be 2 weeks also. What I mean is
so why not sell today and watch, right? What's happening? Is there a case for that?
Well, we have shorted a little, but we are not selling anything now that, we have come in absolutely distancing ourselves from IT and from these zero growth companies and anything to do with US. Please understand the risk right now is not India like it was 3 months ago. It is what happens to the US and its effect on India. I don't think the effect is on direct India. It is what these policies mean for US in terms of inflation and other things. Today, I think JP Morgan or somebody is saying 150 or 125 basis points increase in inflation. Right now on Bloomberg, I saw somebody saying no interest rate cut this year. It's all going to be driven by US now. So we have to see that market and then react. But I'm saying first day, we can't be jumping with joy, even though one more day has passed without paining us. So that is good.
All right, Samir, absolutely. So we will wait and we will come back and we will chat again. There'll be many conversations over the next many weeks, months. As this story progresses, April 9th is that day, right? You said Vietnam, perhaps tariffs go to 10%.
No, I'm not saying that, but I'm saying logically.
It's possible, yes.
It could be, or maybe a few days later, it could be. Because now they have no tariffs, then what can you do about that?
Correct. No, absolutely. Although there are other longer discussion we can have is what the tariffs itself are not reciprocal, actually. They are based on the size.
But they are a good summary. By the way, they are a good summary. I saw on Twitter, which is a good thing. You can also try. You put this formula on Grok and on ChatGPT, and it says very good formula. Actually, it is a summary. Instead of saying how much is your non-tariff barrier, what is your policy on this sector, that sector, you say in aggregate.
So you're saying they've got on ChatGPT to arrive at these tariff numbers, Samir, on a lighter note.
Sorry, what?
No. I was just joking. I was wondering.
Is embracing AI and Grok.
It's AI, Grok, ChatGPT. That's how they've arrived at this glorious number of 27%.
For sure. They must have said, give us a good, easy number.
What's a good tariff for India? What's a good tariff for Vietnam? Okay, chalo, let's go with this. All right, Samir. We really look forward to more conversations. We, of course, need much more clarity as this juggernaut rolls on. Thank you so much for joining us this afternoon. Okay, on that note, I think we have to take a quick break. Yeah, we'll do that. Market's still down about 80 odd points on the Nifty. Take a break. We'll come back on the other side. We will have Pathik Gandotra and Gurmeet Chadha joining in to talk about the market verdict after Liberation Day.